Form 1120 has three schedules that trip people up: Schedule L, M-1, and M-3. Think of them as book support. Schedule L is the balance sheet from the company's books. M-1 and M-3 explain why book income doesn't match taxable income. On the EA exam, they love asking which schedules are required based on gross receipts and total assets. Start with the small corporation exception. If a C corporation has under $250,000 of gross receipts and under $250,000 of total assets, it generally does not have to file Schedule L or Schedule M-1. Notice it's an AND test. If either number pops over 250,000, the exception is gone. Once gross receipts or total assets exceed 250,000, Schedule L is required, and Schedule M-1 is required too, unless the corporation is large enough to be pushed into Schedule M-3. Exam tip: when you see a fact pattern with 500,000 of receipts or 1 million of assets, your brain should immediately say Schedule L and some kind of book-to-tax reconciliation. So, when do you switch from M-1 to M-3? Schedule M-3 is required when total assets exceed $10 million. That's the big trigger the exam wants. If assets are 10 million or less and you're over the 250,000 threshold, M-1 is usually the simpler choice. If assets are over 10 million, you file M-3 and you're in big corporation territory. Let's apply it fast with three common scenarios. Indigo Shoes has 196,000 of gross receipts and 45,000 of assets, under both thresholds, so no Schedule L and no M-1. Seafoam Design has 500,000 of receipts and 1 million of assets, over 250,000, so Schedule L and M-1, but not M-3. Groveland Manufacturing has 60 million of assets. That forces Schedule L and Schedule M-3. One more exam mindset. Book-to-tax reconciliation exists because book income follows financial accounting rules, while taxable income follows the Internal Revenue Code. Tax-exempt interest is a classic example. It shows up in book income, but it's excluded for tax, so it becomes a reconciling item. Depreciation methods and meals limitations are other common reconciling items you'll see tied to M-1 or M-3. Cedarstone Bakery Incorporation. It's fiscal year C corporation. Its fiscal tax year ends January 31st. When are the corporation's installment payments for estimated tax due? The options include sets like May, July, October, and January, or the more familiar April, June, September, and December dates. Think about which months of the tax year drive the due dates. The correct answer is May 15th, July 15th, October 15th, and January 15th. Corporate estimated tax installments are due the 15th day of the 4th, 6th, 9th, and 12th months of the corporation's tax year. A tempting wrong answer is the April, June, September, December pattern, but that's the calendar year rhythm, not a January 31st fiscal year. Summit Harbor Services Incorporation with a fiscal year end of June 30th. When is the due date for filing its Form 1120? The choices include July 15th, September 15th, October 15th, and December 15th. Don't guess based on calendar year rules. Use the months after year-end rule and watch for the June 30th exception. Think about it. The correct answer is September 15th. For a C corporation with a fiscal year ending June 30th, Form 1120 is due the 15th day of the third month after year-end. The tempting wrong answer is October 15th because many people default to fourth month after year-end, but June 30th year-ends have this special third month due date.